Hey everyone, let's begin our Friday session, shall we? Thank you for joining me. Hope you had a good week. And today, as you know, what we're going to do is we're going to use the Trade Scanner Pro to see if we can extract some profit from the micro NASDAQ futures. Now, I do this every other day, Monday, Wednesday, and Friday on my Apex Prop Firm account. So all the trades are documented. The goal is to see if I can beat the eval using the Trade Scanner Pro in a sustainable way, not putting on a gigantic position and hoping for the best, which is another type of strategy. But we're trying to do this in a sustainable way, because if you can't generate sustainable profits, then the whole purpose is pointless. All right. So with that said, we're going to start switching some charts up around here. Let me see what's going on in my chat. We got here. Lav, how are you? Good to see you. All right. Let's see how bad my numbers look here. Oh man. I don't know why I do this. Every time I look at those numbers, they like get worse. All right. Anyway, so we're gonna switch this over to the NASDAQ MNQ1. By the way, people, if you're watching me on Twitter, do me a favor and retweet the stream. I mean, YouTube is just pointless. I don't even know why I bother streaming on YouTube. I guess it's I get some, hey Nugs, how are you? I guess I get people like these guys who send me messages and help me feel better and help me feel that I'm not talking to a wall. Okay, otherwise it's just me and a wall. But yeah, if you're on Twitter, retweet my stream, please. I don't care if you have 2 followers. It's at least it shows the Twitter algorithm that whatever. Okay, so we're going to switch these charts. I have MNQ over here. Bitcoin, by the way, never pulled back. That's interesting, right? These are tough markets, by the way. All right, so we're going to go MNQ1 over here. Okay. Now, if you want to, there's a link, as you can see on the screen here, for the Trade Scanner Pro. If you want to try it out for 14 days, you can. It's free. But you have to, in order to get a good experience from it, you have to watch these streams. If you don't watch these streams, you're not going to figure it out on your own. I know a lot of smart people out there, look, oh, I'll figure it out. You will not figure it out because it's not intuitive. The Trade Scanner Pro is not a forecasting tool, and people usually go into this with that type of expectation. Like, oh yeah, it's going to call trades for me. No, it's a confirmation tool. You still have to come up with the idea, and that's what I do on every single stream. So go back and watch my previous streams, because this is free training. And in these streams, you see examples of when I have to switch to counter trend mode and all that other stuff. And you also see I'm mapping out all of my rationale, so you understand the reasoning behind why I'm picking this signal over that signal, because these signals could be random. That's what you need to understand, okay? So if you're trying out the Trade Scanner Pro, make sure you watch these streams, or else you're wasting your time and mine. All right, so first thing we're going to do, as you know, this is a 2-step process, right? The first step is we want to gather context. The second step is we want to confirm it, our idea. So we're going to use context to get an idea. Now, it doesn't mean it's always going to be right. On Wednesday, I had a pretty tough day. I thought the market was bearish, and then it was just bullish the entire time, and I got stopped out 2 times, right? But in those situations, the lesson there was you have to stick to your risk parameters or your risk limits. At some point, you have to stop. If you keep going, especially with these prop firms, you will blow the account. So you have to have some sort of fixed, like, okay, if I do this and I'm wrong 2 times, I'm done. I don't care what my P&L is. I am done. And that's what I had to do on Wednesday. All right, so the first thing we're going to do here, and let me show you the account, by the way. Here's the account. This is the Apex account. You could see here, the P&L, the what's in the account, the available margin, whatever. You can see the numbers. Okay, they haven't changed because I don't trade this account outside of this stream. Now, it's important to understand prop firms are not perfect. Not only that, but they're not exactly out to help you either. They profit from you making mistakes. They profit from the fees, the eval fees that you have to pay to take these prop firm tests, right? These evaluations. And they hope very much that you blow the account. That's why they give you a $50,000 account. It says $50,000, but in reality, it's only a $2,500 account. What they're giving you is $50,000 of leverage. Perfect to wipe out a $2,500 account when you over leverage it like that. So that is their goal. Now, if you know what you're doing and you understand the parameters of a prop firm, it's a great way to learn how to trade. Not only that, you don't have to risk your real money, and it gives you enormous confidence, especially when it comes to size. Because you could throw around on this account, I mention this all the time because it's important to mention. I can throw around 10 mini lots, which in reality, I would not be able to afford on a $2,500 account because of the margin requirements. 10 mini lots. That's a lot, right? That's 100 micro lots. So you could throw that around with confidence. And if you're wrong, you blow the account in one trade. All right, well, it just costs you the eval fee. But if you're right, you make thousands of dollars. Now, again, that's not that we're not going that route. That's a gambling route doing stuff like that. But there are strategies that utilize that concept to beat the eval. And then you have to switch to a sustainable strategy for the payouts. We're just going with the sustainable strategy the entire time. Hey, how are you? Good, good. Thanks for stopping by. I appreciate you guys, my 5 people watching me. All right. Yeah, 5 people. I guessed it. I guessed it without even looking. All right. So now, guys, as I go through this evaluation, right, as we go through the 2 steps, if you're confused about something or you're unsure why I'm doing something, please ask me. That's what I'm here for. I'm committing this hour. This is a very valuable hour. I should be on my real account, okay, doing this at this time. But I'm giving you this time because I want to also grow my Trade Scanner Pro following. And this is the best time to take trades on 1 minute or 30-second time frames, which is the whole purpose, right? We're looking for day trades. So you could use the Trade Scanner Pro for larger time frames, and you can use similar concepts. It's actually a little easier when you're using a 30-minute, 1 hour, but other rules apply in those areas, right? But you could, everything that I'm showing you here, you could use. You just have to understand where it fits in. Now, all right, so I know I'm talking a lot. Let's talk about this chart. So, excuse me. So we had non-farm payrolls today at 8:30 a.m. Eastern time. The market likes the number. Look where we're at. NASDAQ is up 293 points, okay? I checked that at that time. The market was up about 30 points, I think, or something like that before non-farm payrolls. Non-farm payrolls came out and the market, whatever reason, liked it. I don't know what the result of the report was, nor do I care as far as the details because that doesn't concern me. What concerns me is how the market interpreted it, right? The market likes it. That's all I need to know. That's it. Now, this is bullish, right? This is the daily time frame. This is pretty bullish. And it's funny because remember all the nonsense from like YouTubers and TikTokers about how the market's just going to, collapse and blah, 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 right? The market is going to, I don't see any of that, huh? All that bearish talk is complete nonsense. All of it. Look at this. They've been saying bear, bear, bear the whole time. Nothing bearish about that, right? Never listen to people. That is my point. Never listen to people. Listen to price. Price gives you reality. People have other agendas. They're just doing those things to get your attention. But if you're inexperienced, you're going to believe these clowns and you're going to make bad decisions because you're acting on misinformation. You say, well, why would they give me misinformation? Because they're just looking to convert your attention to money. They don't care about the quality of the information. And anyway, it's free. They're giving it to you for free. So say, hey, what do you want from free information? Right? You can't sue them or anything. So anyway, so when we look at the daily chart, I know I have to move along here. All I'm looking for, I'm not looking for trend on this chart because as a day trader, it's not going to be relevant. As a swing trader, this would be relevant, but not as a day trader. You need to know that in advance what you're going in for. You can't come in and be like, okay, I feel like being a day trader today. You have to go in with a purpose. Okay, I'm looking for day trades. That's it. Okay, so that's what we're doing. So for that reason, what I want to do is I want to look at the previous day's high and low, okay? And I want to look at today's. Look, I mean, we're inside of yesterday's range. Look at that, right? This pin bar is yesterday. See that? And look where we are. We're just fooling around inside that range. That's cool. It's interesting to know. That's all I need to know from this chart. Now, let's go to the hourly chart. As you can see, those blue lines are still on the chart. So on the hourly chart, I'm going to get a little bit more detail. Now, the hourly chart is what I'm going to use for trend and levels. This is the most important part of this analysis because this is where our trade idea is going to come from. And we're going to shape our expectations from this part. So I have some levels here. My general structure is what? How would you guys classify this? I mean, let's be a little interactive here. How would you classify this structure? Bullish or bearish or range bound? How would you classify the general structure from all the data that you could see on this chart? Anyone want to take a guess? Like, how could we classify this? We're just looking for a general trend classification. What would we call this? Bullish, bearish, or range bound? This one could be a little tricky. Anyone? Don't be shy. Well, you guys are thinking. Let me look at my numbers here. Have they improved? No, not really. People on Twitter, do me a favor. I hope you're retweeting my stream. Please do me that favor. Retweet the stream. YouTubers, you could press the like button and stuff, but I don't think 5 is really going to matter to the algorithm. Okay, bullish and consolidating. Super bullish. Okay. All right, good answers. Well, Lav, A, actually, you have the more accurate answer. I would go with that answer. It's not super bullish. Okay, Lav, it's not super bullish, and here's why. Yes, the general structure is bullish. We have a higher high, higher low, and we don't really have a higher high here. Okay, range bound. Okay, we have this is a tricky answer. We have a combination. We have bullish but range bound. That's how I would classify this. And the reason is the general structure is bullish, right? One thing we don't have is bearish. So there's no bearish here. This structure is bullish. It's a higher low and basically attempt at a higher high. But we do have the higher low. It's in place. Now, with that being said, though, we are stuck in, this is a range. So it's a mixture. So what do we do with that? Do we play the range or do we work on the bullish side? We can actually use both pieces of information to give us guidance. So if we're generally bullish, that means we should be anticipating that the resistance should break, right? That's going to be one scenario, and we have to watch for that. The other thing is, if we pull all the way back, let's just say the market pulls back, spends the day pulling back. We have this area right here, right, this low, which is 19,748, and we have this higher low area right here, which is 864. So basically, we could say 750 and 850. We could round that. Those are going to be support levels. In a generally bullish environment, support levels should hold. So we're looking for those inflection points. We're looking for buying activity. If we get back into these areas, the market's going to look ugly. If we get back into these areas, these are situations where we might want to be open to counter trend mode for longs, okay? Because the general structure is bullish. Does that make sense? So we sort of have some behavior to anticipate here. Now, to get to those levels, probably if the market were to pull back, because again, we don't know. There's no way to know if it's going to pull back to those levels. It's if it pulls back. That can take hours. It could take the entire day to pull back there, right? So it's just we're preparing in advance for that possibility. Now, the other side, the range high. We have a range high here. But this range high, based on the structure, there's a greater probability that it can break. But I wouldn't be overly bullish either. Like I would be like, oh yeah, it's definitely going to break. You can't say that. And the market's kind of hesitating here. So this is tricky, right? My first impression in a situation like this is to try to play the range high, the failed high, the resistance, even though it's likely to break. It's very conflicted. All right. And it's confusing, even as I explain it. Hey, Kai, how are you? Happy Friday. Thank you. Even as I explain this, it can feel conflicting Now, if you're a beginner, the best thing to do in this situation, I'm going to tell you right now, is just stay out. Right? Either look for longs or stay out. Like, and look for longs at those predetermined levels or walk away. That's probably the best thing to do. Now, if you're more advanced and you want to go for the range high, right? The short at the range high, that's what I'm open to. Because we have, it's sort of a mixed market. It's generally bullish, which means there's going to be a lot of emphasis on supports, but we do have a resistance that's stuck here. So I have to kind of look at it on both sides. In fact, for day trade purposes, we can even say both sides are sort of equal, right? And again, I understand how that could be confusing. So beginner is your best to paper trade or just stay away, where we're going to try this and see what we can do. Now, so that's our assessment, right? So we're going to basically lean on the short side because we're looking for a consolidation. It's mean reversion. We're looking for the thing to get back to the middle of the range, right? Because we're rejecting this resistance. Okay, that's so the idea is shorts. You guys understand that? Shorts at resistance levels, though. Okay, if we're at some kind of support, then I'm not in a hurry to go short. So this is my 1 minute time frame. In fact, I'm going to change this to a 30-second. Okay, because we're going to look at 30 seconds. Let me turn the Trade Scanner Pro on. Now, when you get the Trade Scanner Pro, it's very important that you do this. You have to go to your settings panel, right? Because this is not set up automatically. You got to turn these things on. Trailing stop, you got to turn these things on. Otherwise, you're going to be missing information, right? You have to turn those things on, right? See how my chart's populated? Okay. So there's a signal there. I'm not going to be in a rush to get into this because let me make sure we switch the charts over here. We're going to change this over to the 1 minute chart. Okay, so we're looking at 30 seconds and we're looking at 1 minute. Okay, and that's where I'm looking to take trades. Now, let's see here. I mean, I got this lined up for 3 contracts. All right, I'm going to go for it. I'm long 3 contracts. All right, now let's see. By the way, I haven't gotten the best price. I just missed the price that I got there, but I haven't gotten the blue line. Okay. Oh, hold on. That's not what I want to see. Okay, so I'm long from basically, well, let me see my price. Where am I long from? Can I see my notifications? 20068 and a quarter. I guess that's where I'm long from. 20068. Okay. So that 20068 is like up here. In fact, I'll put it on the chart. This is 20068. So I don't have the best price here. Okay. Now, we're going back into that resistance area. But remember, why was I so quick to go long? Because we have this double bottom here. And remember, this market is generally bullish. And there's a minor support. We rejected that pretty sharply here. Okay. Now, if this thing gives me a hard time, I'm going to tell you right now, I'm going to bang it out like right away. I'm not going to stick around and wait because I have a bad price to begin with. Okay. So what I'm going to do, if this thing gives me a hard time, I'm just going to press the sell button. And I'm going to be very tight with this because I don't like my entry price that much. I'm not getting the full benefit of the reward risk, and I don't want to give anything back. So now let's see if this thing wants to go straight to the profit objective. I'm going to blow one out there. All right, so I just changed my contract size to 1. And let's see, we're going to give me a hard time here. Let's see. I'm going to tell you, this market has been very tough to trade, by the way. Outside of this time period, outside of 9:30, because if you notice, if you look at these NASDAQ charts, the ranges are much tighter, right? The candle ranges. In fact, if we measure this risk, my risk is 44 points. My actual risk is 55 points because I got a bad price. Because I waited a little bit. I waited. I hesitated before I bought that, and the market started to pop. Okay, so I'm going to take one off. I just want to take the money. I don't want to. Like I said, I'm going to be very tight with this. Okay, back to my entry price. See what I mean? Like if I'm going to have to lose on this, I'm going to lose on. I'm not losing on 3. I'm going to lose on less. I'm going to switch this to 2 because I'm going to prepare to just bang them out. What time is it? Okay. Oh, we got just 3 minutes before 10 o'clock. Now, we don't have, non-farm payrolls was the big news for today, right? And that's out of the system. So we don't have non-farm payrolls. So 10 o'clock, we don't have any, as far as I know, we don't have any specific news. But a lot of times you get strange price action around 10 a.m. 10 a.m. is also the opening range establishment, meaning the first 30 minutes of the market, right, gives us our opening range from 9:30 to 10 o'clock. So the first 30-minute candle is established at 10 o'clock. And a lot of times you get price action. You get some type of price action there. Often it's because there's news. Okay. So, let's see how this thing plays out. Like I said, I'm not going to be very I'm going to be very tight with this, meaning like I'm not planning to see, like it wants to give me a hard time. I should be seeing green candles, not red candles. It's sort of fluctuating around my entry price, trying to give it a chance. All right. Like that. Okay. All right. Like this, see, this would be an opportunity to add one, but I'm not. I blew out of one. I'm just going to hold on to what I got. But like if you were aggressive, you can add right here. All right. Doesn't mean it's going to work, but at least, you're getting some sort of green and it went back to your entry price. So you're getting that little pullback. That's advanced. Like the Trade Scanner Pro doesn't tell you to do that. That's just something you have to know. Because see what I mean? Like it could just turn around right in your face like that. It's a 30-second chart. So it's going to be much more erratic. My trailing stop is now active, as you can see, right? This yellow line right here, and it's now actively reducing my risk. So if I respect the trailing stop, my risk is going to be a little bit less than 55 points. My risk now is going to be 47 points, which is what my original risk was supposed to be anyway. All right. Okay. I like to see that. Let's see if we can get some follow through here. I'll tell you, this market, as far as follow through, has been sucking, man. Like yesterday, the market was like in this tight range until the close of the day, and trying to trade that, all you do is churn. Okay, and with the plus the commissions, and there's no follow through on the trades, it's just not worth it. Okay, here's 10 o'clock, right? Here's the 10 o'clock number. See, we got that pin bar. So if something is free, you are the product. Hey, Hussein, how are you? Yes, that's very true, Kai. If something is free, that's a very good saying. If something is free, you are the product. Yes, that's right. All right. All right. So this price action is just kind of, not going anywhere. It's fluctuating around even for me. I have my 2 micro lots on. That's why I blew out of one. I'm not going to add in case this thing, just goes straight to the stop, which it can do. I'm respecting my risk. We're just in this little consolidation situation. I mean, look, we got up to this point. What was this? 2099, and we just like rejected. Okay. I mean, whole numbers, by the way, there's that's something you have to pay attention to. Whole numbers like 21, right? 21 or 20,100 or 20,050 or 20,000 even. Whole numbers have an effect. People react at those levels, even if it's briefly. So not a big surprise that we rejected it there. But one interesting thing is, if it was a true rejection, this thing should be going in a straight line lower. So like, for example, if I was short right now, this is not what I'd want to see. That this is not weakness, right? If the market's weak or it's getting rejected, it should continue, right? And test the low, not this. So that's a sign of strength. That's cool. Range bound short term uptrend. Yes, that's right, Kai. Yes, I would agree with that. Range bound is the short term or more recent data, and we're trying to play that. But the general trend is bullish. That's important to know because support levels, like I mean, look, this is a minor support level right here. Okay, it's minor, and it got respected. So there are buyers in this market. They longs are enthusiastic, and you have to keep that. So that means we can expect a little bit more out of support levels. Okay, I like this. Look, we made the higher high. I'm going to prepare to sell one at the profit objective. Can we get there? It would be nice if you get there. Make me look good. But you want to know something? It doesn't matter if I make good trades because no one signs up for the trade scanner pro. I had one bad day on Wednesday, or a losing day, but all the days before that, right, for at least a week or a little bit longer, were all winning days. You would think people were like, "Oh yeah," doesn't mean a thing. No one cares. Okay, here we go. Sold one at the profit objective. Very nice. Thank you, Mr. Market. I appreciate that. All right, now I got one more contract. Let's see how we're doing here. Let's go back to so you can see my position here. My account summary. Oh, I'm up 200. I'm almost $300. Okay. Now let's see if the runner can do some magic here. Look at that. All right, now we're back at that resistance that got respected before. Now remember what I said. Resistances are likely to break, and that's quite a move there. Remember, and I just finished saying, a weak market should not do this. Now, what happened in this situation? What likely just happened is you had these shorts who follow their RSI, right? These clowns, RSI, and they short this thing, and it's not a short. So now they all get stuck in it. And then they got to face this, and they get squeezed. Okay, and then at this point right here, you have the breakout traders jump in long, and you get this. And now, these shorts are stuck in this thing, and they have to get out, right? That's what causes the squeeze like that. Now, maybe they reshort this thing up here. Maybe it sticks. Maybe it doesn't. I don't know. But I'm preparing to get out. Let's see. My trailing stop. Look where my trailing stop is. Can you guys see that? My trailing stop is right here. That's where I entered. That's my entry price. That upper blue line, I had to draw that in because I missed. Think about this trade was called at a much better price, and I missed that price. Okay, so let's see, I got into this thing 10 points worse. 10 points worse I got in. Okay, and I'm still getting away with some green. I'm happy with that. My trailing stop is now above my entry price barely. So I'm basically like, this is a risk-free trade, right? So I went from 55 points of risk to risk-free, as long as I respect the orders. Okay. So, if you don't respect these orders, then this whole thing is pointless. All right, back to the highs. Higher high should be likely now. Higher low often leads to higher high. Let's see it. Let's see it, Mr. Market. Show it to us. Let's see it. You gonna do it? I like this candle. I like this. This is a beautiful candle. That's what we should see in something that's strong, right? But can we do the higher high? Now, if we do, typically in a situation like this is again, breakout traders are sitting there, right? Prepared to pile in again. That's often what causes the squeeze, right? You got people shorting it now, again, because RSI tells you to go short or some other nonsense. Meanwhile, you're fighting a strong market. Okay. And you get these fake out candles. You're like, oh yeah, bearish candle, I'm shorting it, right? You get that. So you jump in short, but you're ignoring the higher low. This is strong. So here, let's see if we get that squeeze. This is, if we're going to get it, this is where it should be. If we don't get it, that means the buying is being absorbed. Okay. So let's see. Any questions so far? So again, I'm demonstrating, look, the thought process behind the Trade Scanner Pro. We came up with the idea, right? We said we were looking for longs, possible short at the resistance, which is where we're at right now. But as soon as I pulled up this chart, we had a long signal. I saw the double bottom. I said, you know what? I'm going to give this a try. And I went for it. Now remember, the general trend we said was mixed. It was bullish but range bound, remember? So there was nothing really bearish. The bearish side is the aggressive side, which, we could be open to, but my first trade's green. I'm not taking any more trades. I'm done, right? That's the whole goal here. If you get it right the first time, done. Turn this effing thing off and walk away, especially on a Friday on NFP day. Because I'm going to tell you right now, the afternoon is probably going to suck. Usually, right? Because everyone goes home early, whatever. Volume usually dries up, and it's just an absolute waste of your time. So that's why you take your money and you turn your computer off and you enjoy your day. Okay, that's one of the benefits to being a trader. You only have to work 30 minutes. You make enough money. You can make more money than most people make in a week, and you're done, right? Because this is a game of risk. And the more time you spend in the market, the more risk you're exposed to. If the market is nice enough to give you a gift, you take it and you run. Okay? Yeah. So like it was like that yesterday, because we had pre non-farm payroll market, and I was trying to mess with that. Man, what a waste of time that was. I was so mad at myself for, with the experience that I should know better. Okay, and I still messed with it. Not on this account, on my other account, and let's just say I wasn't profitable. Okay, so I mean, it wasn't. I wasn't throwing around size or anything. It wasn't a lot of money. It was like a couple $100, but still, I don't like to lose a couple $100 either. So, but to be clear, on this account, I only trade this account on this stream. I don't trade this account otherwise. And the reason why I do that is so that you can see I have every single trade. There's a record of it. And not only a record, but witnesses. You guys are watching me do it. So if someone, he's faking it somehow. Yeah, I'm faking it in front of, let's see, how many people I got here? 6 people. And plus all the people that are watching on Twitter. I don't know how I could fake this. This is not a replay. You guys can watch the price action on your own charts. It's not a replay. Right? By the way, have you guys watched Tommy Anytime? Anyone watch him? Speaking of frauds and exposure, because he explains how they fake the P&Ls on uploads, and how they fake their withdrawal statements and how they fake all that money that they make. It's all fake. So right off the bat, if you follow someone that's using a MetaTrader account, right off the bat, just take it with a grain of salt. Chances are it's fake, because you can actually get your own MetaTrader server. You can rent a server. You can actually log in to the trade log on your server and enter trades after the fact. Imagine that. You could go to the table, the trade table, and say, okay, I bought it here and I sold it there, and here's the timestamp. And then it'll show in your account, it'll show that you made that trade. And then all you have to do is go to here, replay the trade, and pretend it's real. Yeah. Yeah. And you see what and not only does the guy expose their tricks, but he's funny. I mean, his jokes, I was laughing. He's funny, that guy from Australia. He should have way more followers than he has. For those are quality videos. I mean, he's not making those videos in 5 minutes. Yeah, so far the runner is running. How nice is that? Let's see how I'm doing here. 350. You got to be up like $400 by now. Come on, man. I need to make some money back here, bro. All right, but so far, look, right? Our idea is still sticking. The market's strong. The market wants to be strong, right? So we weren't fooled by all this. Like all the RSI people got short, just got squeezed. That's the squeeze. They get squeezed. More buyers pile in, and they get squeezed out. Now, here's the thing with the trailing stop, right? My trailing stop is up here now. I have a choice. I can bang it out now because a trailing stop is never going to give me the top. You have to understand that. Okay? The trailing stop is never going to get me out at the top. What it does is it opens up the possibility to make a little more money than I normally would have if I just wait for the profit objective only. So you see, it's getting a little iffy here. I may just take the money before the trailing stop because why give it back? Yeah, you know what? Goodbye. I'm out. I'm not giving it back. If we stayed green and this candle was green or something, and a lot of times they shake me out when I do that. What I just say, like they shake me out, but I'd rather be safe than not because let's see how much I got. 280. All right. So we were at 315. I gave back a little bit, but we'll watch this trade until it goes to the trailing stop. I don't want to give all this back. I don't want to give this back. Right? The most I could have gotten out of this trade would have been up there. Let's see. So I entered here. The most this trade was worth was 83 points. Okay. If I exit on the trailing, if I wait for this trailing stop, that's 36 points. I mean, that's like I'm giving half of it back, right? On that one lot. I got my profit objective. So, you have to decide, like, do you want to give it the chance? This thing may hold and it may never touch the trailing stop, and this thing may go back up to the high. But you have to take that chance. It may go to the trailing stop. We don't know. The whole point of the Trade Scanner Pro, the whole point of the Trade Scanner Pro is to reduce or simplify your decision-making process. You could say, well, I'm just going to follow the trailing stop. You could do that. I'm not willing to give money back. I don't want to give money back. Okay? And this thing may go higher or lower. Who knows? Who cares? On Wednesday, I blew what, $400 or something like that, and I made more than half of that back. Okay, it would have been nice if I made the whole thing back. I was close, but I'm not sitting there competing with my P&L. I just want to be green. That's my goal. I want to demonstrate green trades, and I'm green, and I'm done. I don't care about anything else, right? So you can see I'm back to 57.73. So I'm still minus $200 off my high on that account. I just have to, I have to make some adjustments. Like I'm going to add these buttons over to this screen over here, this chart over here. And I think there's a setting on here where it'll actually show the trade on the chart. It'll actually show the trade. So, but look at this. I got shaken out. This happens all the time. And the trailing stop would have kept me in, and I would have had a chance to get out up here again, right? So that part is up to you, how you want to manage that. Okay, I can't emphasize that enough. The trailing stop is never going to get you out at the perfect top. Never. If you're trying to get out at the top of a move, that's going to be random, right? So for example, when we looked great up here, of course we could see this after the fact, but I could have said, you know what, I'm up, whatever, I'm up this much points. I'm just going to blow it out randomly, and and that would have been a brief top. Look, we're making the higher high. Okay, so excuse me, that would have been nice to still be in, but I don't want to take any chances. I'm green, and that's that. Now, common mistakes here. Again, double top. People are going to think, oh, it's a short, right? It's a short. I wouldn't short this. I wouldn't short that. You got a high or low right here. I wouldn't short that. So we'll watch this trade just to see like what the actual outcome would be. Okay. Also, notice something else here. There were a couple of losing trades. Look, this was a losing trade over here. This over here, let's see what is this. This was a losing trade, 17 points. All right. I guess that was green a little bit and it stopped out. Looks like this was a losing trade over here. 38 points. But I got the winning trade. Okay, what a beautiful win, too. Look at that. And this trade is still active. So let's see how much time do I have. Okay, yeah, I got a little more time here before I sign off. Any questions, you guys? So in this situation, I never even had to use counter trend mode. You see that? Ideally, that's what I want. Ideally, I don't want to use counter trend mode because counter trend mode is confusing, right? So I never had to change the trend on this chart. Oh, look at that. Now it's really squeezing. Get the vertical candle. See that? Oh, man, they really shook me out good. I could have used the money, but all right, whatever. So I made my decision. I wasn't going to give it back. And look what I gave up. This is the opportunity that I gave up. Okay. You can say, oh, you could have gotten back in. I'm not getting back in. That's when you're asking for trouble. Okay. Like getting back in because you're like, oh, this thing's going to go forever. And then you buy the top. Just job is done. You made your decision. Stay out of this thing's way. Right. So the trailing stop is now almost at my profit objective. Look at that. So we'll just watch as it advances. So you see, no shorts. You see that? Now, just to kind of recap the trade, do you see how that came about? Right? We looked at the bigger picture. We also determined that the smaller picture was range bound. We noted that we were at a resistance. But since the general trend was bullish, which we all agreed on, I said, if you go back, I said support levels are going to be more reliable, or that's how we should think of them. And we had a trade at a double bottom, which is a minor support. That was why I took that trade. And I pretty much, and I got in at a bad price too. I got in at the upper blue line, not the actual price. I should have had a better price. I should have made more money on that trade. Why you wait to see if it pulled back into the range? Because I wanted to take my money. I don't want to give back my profit. That's why. Like, if I wasn't so profit sensitive, then yeah, I would have been a little more patient with it. And I would have been like, all right, look, that's the whole point of the trailing stop. But any sign of trouble, right? Because we were up here, any sign of trouble, I'm taking the money. Because this could easily give it back, right? And I don't want to give back. That's the thing. I don't want to give back. When I'm up some kind of money, I don't want to give it back. So that part, there's really no right or wrong way to do this. It's going to just depend on what you're willing to give back. If you say, you know what, I don't care if it goes back to break even, I'll get out at break even, right? Then you're being very flexible with the market. And if it goes back to break even, you have to accept that outcome. If it doesn't go back to break even, now you're happy. You're like, oh yeah, I'm getting rich, and all that. So that part you have to decide, and that's going to be a function of how aggressive or how conservative you want to be. I'm being very conservative because I need to come out green. I need to be like, $200 or $300, whatever, and I'm happy. That's the goal. If I could do that 10 days in a row, which, it's hard to do, then I beat this eval. And then the money that I make in this account, I can actually withdraw. I can actually put in a withdrawal request and get paid on the money that I'm pulling out of this fake account. I guess you could call it a fake account. I mean, eval account is not real. It's not real money, but it can be real money. That's why I'm doing it on an eval account. It's much more compelling than using a real account because I can take the risk. It's no big deal if I lose money. And I can even, if I want to be more aggressive with the size, I can be. Okay. I mean, that position that I had on was 3 micro lots. I normally put on only 2. Okay. But I put on 3 because I was being a little more aggressive with it. Look at this. See what I mean? See, got stopped out right there. See that? So this was where it went. That's the actual, if you waited for the trailing stop. Now, here's something funny, you guys. This is where I got out right here. Is that not the same price? That's a coincidence, right? So even if I had waited and I would have been like, I would have thought I was so cool for being at the highs, I still would have gotten stopped out at the same price. That's why, in my opinion, you're better off taking the money, at random price. When it comes to the runner, unless you get a really sharp move, you just take your money. What are the specific reasons for using the hourly trend? Okay. Was it performing when you... Okay. First of all, backtesting. I don't believe in backtesting. Backtesting on the retail level is an absolute joke. Okay. So first of all, I only forward test. I don't backtest because backtesting is you're on fixed data and the movements of those data are not for the same catalysts as we will see in the future. So it's completely inaccurate in my opinion. All right. So I do not put any weight on backtesting on that type. To really back test, you have to do a Monte Carlo simulation. It's much more involved. You have to have clean data. The data has to be scrubbed, and then it has to be randomized, and then it projects forward. It's much more complex than these nonsense back testing platforms that they sell to retail traders. Okay, number one. Number two, so to answer your question, I'm interested in day trades, right? That's a very important part of this. That's going to determine what information I look at. So because I'm interested in day trades and because I know that I'm going to work on 30 seconds or 1 minute, as you know, I do that on every stream. Because I know this in advance, I'm only looking at certain information. Now, I use the daily time frame just to get some levels, right? The bigger picture levels. And those levels are yesterday's high and yesterday's low, and today's overnight high and overnight low. That's really all I'm interested in because I'm just curious. It's not the most important information in the world, but I want to know where we are relative to yesterday. Are we at yesterday's high, which we were, and that was a resistance which we broke through here, right? If I go back to the daily time frame, as you can see here, we broke yesterday's high, not by much, but as you can see, we broke it, right? See that? So, and it looks like there's a trade on the hourly chart over here. Now, don't be confused. There was a long trade all along on the hourly chart. There was a long trade in play the entire time. Don't be confused by that. Do not, if you see other trades, ignore them. If they're not, if you have not sourced an idea and that has no relevance, to ignore them because they can be random. It may look good after the fact, but you have to ignore them, right? So I was saying, I go to the daily time frame because I want to get a sense of levels. That's the first thing, right? And then I go to my hourly chart. I go to my hourly because now the hourly is going to give me the more recent structure and minor levels, right? Because there's major levels and there are minor levels. So now I can determine, okay, bullish or bearish based on my hourly. And that's really the momentum I'm trying to follow. So then I'm from there, right? And I can also identify minor levels, support and resistance levels. And then I want to see where we're at, right? And then I pull up my 30-second and my 1 minute time frames. And this is now where the Trade Scanner Pro becomes relevant. Because if I've determined that we're bullish and we're sitting at a support level, obviously I should be looking for longs, right? Like that's the idea. I should be looking for longs. If my Trade Scanner Pro says the trend is bearish, which, see, it doesn't say it up here. If it says trend is bearish, then I need to switch to counter trend mode because I am looking for longs. What I am looking for is more important than what the Trade Scanner Pro sees because I have to align my idea first. Look at this failed low. Oh, look at the beautiful move. I gotta trade my real account, man. So anyway, so he is. Oh yeah, you know what, Kai? I think that's fake. Right? He's got these gigantic shoulders, and I don't know. I think that's fake. I think that's just part of his character. I don't know. It doesn't look. It looks out of place. I think he does that for attention, or you know what I mean, for novelty. I don't know. Anyway, so hey, you understand where I'm going with that? So I have my hourly. I've determined my support and resistance levels and my momentum, and now I want to align. I want my Trade Scanner Pro to align with that idea. So I'm looking at trend is bullish or trend is bearish on my Trade Scanner Pro because I have to adjust that now. If my trend is bearish, because on 30-second time frames, this changes frequently because it's such a small time frame. So I want to make sure that I'm aligned. If it's aligned, great. I'm looking for longs, no problem. Okay. If it's not aligned, I have to align it, and that's what counter trend is for. Counter trend mode. Okay. So again, everything I just explained, it's not intuitive, and it's not something you're going to learn in a book. I think a big mistake that people make with the Trade Scanner Pro is they try this thing out and they see random signals popping up and they play them and they randomly work or not. And then eventually what happens is they take a bunch of losing trades and they're like, oh, this thing sucks. Well, yeah, because you're just taking random trades. Most of these tools that you find on platforms like TradingView, they all have the same problem. They cannot see ahead. None of them can. Okay? In order to get really detailed, high quality information, we would have to analyze the order book and patterns that actually unfold in the order book. That's highly sophisticated and not something that TradingView can even handle. Okay? So we can only look at a limited view, but there are some useful tools, right? And that's how this thing works. It's supposed to reduce your decision-making burden. You come up with your idea, and then you let this thing handle the rest. Once it confirms your idea, it's a confirmation tool. So it'd be the same analysis for low time frames, regardless. Like, well, all right. So no, the 1 minute, I'm not reanalyzing, right? So I've got my idea from the daily levels and my hourly structure. My idea is set. My 1 minute, my 30-second, I'm just looking for confirmations. I'm not reanalyzing anything. That's the whole. Now that's where the Trade Scanner Pro is supposed to take over, right? Because all we're looking for is a confirmation. That trade that I took was a confirmation. That was the trade right there. That little green thing. Okay, that was the confirmation. That's what I wanted to see. Now, what helped me out on the 30-second chart though was I saw this. I saw that. And I know that double bottoms in a generally bullish environment should be higher probability. Because that comes from experience. Okay, and you'll learn that by just watching me demonstrate that on here. Not every double bottom is created equal, though. Some double bottoms are going to be higher probability. In a bullish environment, a double bottom carries more weight. If this was a bearish environment, I would not buy the bottom of a double bottom. Stand aside. It's probably going to break. That's where double tops come into play. Okay? I mean, using the one hour for our idea and then on the 1 minute. Yes, right. Well, because I'm purposely choosing the 1 minute or 30-second. You could use a 5-minute chart. That's going to be up to you on what time frame you want to day trade. I'm demonstrating the stream here with 30 seconds and 1 minute because if I do a larger time frame, we're never going to have trade signals, right? Most of the time, if you notice, I take trades on the 30-second chart. Notice we don't even have a signal on the 1 minute. See that? I mean, I got long. I got long on this heads up, basically, right? The 30-second chart gave me the signal, but the 1 minute never gave me one, right? This was the signal. It was a 1 minute pin bar. That signal and this signal are the same signal. Okay, you see that? So the 30-second gave me the actual confirmation. The 1 minute never gave it to me. That's why I'm monitoring a couple of time frames. And we have a great solution for that, by the way, where we're going to have like a table on the chart, like a table. It'll take up like a space like that, like a square table. And you'll be able to input your instruments and your time frames. And then it'll monitor all of them at the same time. So you can have 1 minute, 30-second, 1 minute, 5 minute, 15-minute, 30-minute, hourly. And it'll tell you, what's happening on each time frame without having to look at charts. Right, so that's going to be an overlay. Steen is working on that. It's going to take him a while though, but he's working on that. That's an idea that we're going to have for this thing eventually. And when we get that part accomplished, I'm raising my prices. Just so you know, I don't bring that up anymore because I used to say it like every week. I'm going to raise my prices, and then I would never raise my prices because Steen is still working on the updates. But when I get to that point, I'm definitely raising the prices. Okay, so. But yeah, that's going to be a very useful tool because you don't have to have multiple. Right now, what you have to do is you have to have multiple charts up here. So you have to watch a 5 minute, a 1 minute, whatever. And for a beginner, that's going to be very confusing because, like I said, if let's say we're long the 30-second chart, but then on my hourly there happens to be a short signal for whatever reason, people are going to be confused by that. You must ignore that short signal on the hourly. It's not relevant. If it's not relevant to your idea, then you ignore it because it's just random. It doesn't mean anything, right? You're aligning with your idea, not the other way around, right? And I can't emphasize that enough. And I think that's where people go wrong with the Trade Scanner Pro. They just don't get it. They're looking at it the other way. So, and that's why I do these streams so that I can demonstrate in real time how this works. Okay, you guys? All right, so cool. Man, what a day. What an amazing, great price action. I mean, look at this. Even after my trade, You had this failed low situation. Nice push off of that. Look at that. Interesting, right? Now, keep in mind, this can completely change, right? Don't, if you continue to watch, I would not go near this in the afternoon, by the way. But if you were to do that, keep in mind that right now everything is bullish. But if these supports break, the day can close bearish. There could be a sell off in the afternoon. It can happen. So don't get comfortable with your idea, right? And you wouldn't use your 30-second or your 1 minute to assess that. You'd be monitoring your 1 hour. You could also use a 30-minute chart to monitor that as well. Now, remember what I said before about the opening range? Let's just take a look where we are relative to that, because the opening range can help with that as well. So this is our 10 o'clock. So this green candle, see this green candle? That's our opening range. The open of that candle is 9:30, okay? And the close of the candle is at 10 o'clock, right? And then this is the open of this candle is 10:30, right? So this new candle has been open for 2 minutes. So that gives you some more reference points. So this candle, this big green candle, is your opening range, right? That's your opening range. You see that? I'll erase all these other lines because that could be confusing. That's your opening range. Okay? Here, let me just to highlight it again. That's your opening range low. This is your opening range high. So what that means is, as long as the market stays inside of that range, even if it pulls back to the bottom of the range, it's still generally bullish. Okay? If we break above the opening range high, we're very bullish. And that's what I would suspect we're going to do because we have a higher low. It doesn't mean that we will, but that's what I would anticipate. If we break the opening range low, and on top of that, we break like this pin bar candle right there, we break that, then I would say the day is turning bearish. And I would not be looking for longs in that situation. Does that make sense? That's why the levels, the bigger picture levels are so important because they're going to shape your expectations. And like I said, this game is the art of shaping expectations. It's the art of adjusting. That's how you play this game. Nothing else. Excuse me. People think that this game is about, RSIs and stuff like that. And that's complete nonsense. But you don't know any better because that's all you're exposed to. And you're like, well, if everyone else is using it, it must be good. No. What you don't realize is most of these people that are promoting this stuff are just trying to get you to click on their affiliate links. And they're making random wins. They have random profits, and you're believing it. That's how this entire industry works. There is very little to no honesty in this industry. I don't know. I mean, of all the people I watch, I really can't think of one guy that's completely honest. When I see what they do and I see the strategies that they're pushing on people, I'm like, I don't know where they think they're going with this one. Okay, so if it's on YouTube or if they're sharing it publicly, chances are chances are they're selling something. That's it. That's it. And you could say the same about me, but I do make every effort to deliver honest information here, and I'm pointing out exactly what I'm looking at and the rationale behind it. I don't have like another monitor here with like other charts, secret charts that I'm using, right, or anything like that. And I'm demonstrating trades in real time. So, I can't, these aren't replays. This isn't fake. Okay. Anyway. All right. I know I go off on those fake guru rants because, I know we need fake gurus and I know we need to attract a lot of dumb money because profit has to come from somewhere. I understand that. And, I agree with that. But the problem is the whole fake guru side of the business really just tells me that I'm in the wrong space. I probably should be shaping my content for registered investment advisors or something. That's really probably where I should be, not this space, because I can't compete. I don't lie and all that other stuff. I don't do all those tricks that you saw from Tommy Anytime. I don't do that stuff. So I can't compete with guys who do that stuff because the mindless retail trader is always going to go for the guy with the Ferrari behind him. That's how it works. Okay, cool. Right. Well, you guys, I like Hussein was pointing out the other day. I appeal to a more sophisticated crowd, and that happens to be a very, very tiny minority in this game. You know, most smart people, for one, if they know what they're doing, then they don't need to listen to me. If they know what they're doing, this is for people that are trying to learn, but are also sophisticated and understand that this game isn't as simple as using an RSI. All right. Anyway, you guys, so I'll leave you guys with that. Nice day today. Rewatch the stream. If you're on Twitter, please retweet this stream. At least I have a winning day. You can retweet this time, and like and subscribe to me on YouTube here. I could use the help because, again, like I said, I'm really catering to the wrong. I'm in the wrong business, man. So anyway, all right. So guys, thank you for watching. We do this again Monday. And we'll see what we could put together there. If you have any questions, you can email me at marketmarkpremarkets.com or marketsignalspro.com. Try out the 14-day free trial, and come to these streams because this is where I will teach you how to use it properly. Okay. All right, you guys. So again, I hope you learned something in the stream, and I hope you get to enjoy your Friday. Like I said, if the afternoon, I would not push it. Like, enjoy your day. Don't sit in front of a computer screen, wasting your time with a market that's likely to turn to garbage. All right. We had a nice little earlier session here, but it'll probably dry up that's what I suspect. All right. All right, everyone. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.